We just witnessed the most anticipated financial event of this decade, and it's actively tearing the Nasdaq and the S&P 500 apart. For years, retail investors were begging for a piece of Elon Musk's aerospace empire, and this week they finally got it. SpaceX officially made its historic public debut, unlocking the floodgates of hundreds of billions of dollars in shifting capital. But if you think this was a straightforward moonshot, you're dead wrong. The reality is, the debut was incredibly volatile, sending shockwaves through the entire tech sector. And that wasn't even the only bombshell dropped on markets this week. Right as SpaceX hit the tape, breaking headlines confirmed a massive surprise breakthrough on a peace deal with Iran. In an instant, the energy risk vanished. Commodity prices plunged, and institutional algorithms began frantically dumping defensive plays to buy up tech. Now, is this the spark that fuels a historic tech supercycle, or are we witnessing the absolute climax of a hyper-leveraged market bubble right before a violent macroeconomic reality check? Let's start with the absolute elephant in the room, which is SpaceX. The immediate influx of liquidity was staggering, with volume in the Nasdaq surging more than 20% above its monthly average as capital aggressively rotated out of legacy big tech names to chase the SpaceX hype train. However, the initial euphoria quickly collided with institutional reality. Analysts are already pointing out three massive existential concerns, including an astronomical baseline valuation, the sheer capital expenditure requirements to build out the Starlink network, and the absolute concentration of key man risk centered around Elon Musk. The stock experienced a brutal intraday whipsaw, proving that even the most revolutionary companies are bound by the laws of gravity when they hit public exchanges. Now, the bulls are looking straight past the short-term trade friction and instead focusing on pure market domination. Because the reality is, SpaceX isn't just a launch company. It's actually an infrastructure monopoly that's playing out right now. By taking the company public, Elon Musk has unlocked access to sovereign wealth levels of capital to permanently solidify its lead in global satellite internet and aerospace logistics. Every single asset manager tracking growth benchmarks are mathematically forced to buy this stock to avoid underperforming. The volatility we're seeing right now is just institutional players shaking out weak retail hands before the long-term compounding begins. Now, the bears are calling this the ultimate dangerous liquidity drain. They argue that SpaceX entering the public markets at such an inflated valuation is an incredibly ominous sign of late-stage market mania. Because when you look at the data, the capital required for their deep state missions is infinite, and public shareholders are going to bear the brunt of future dilution. And more importantly, it's pulling vital liquidity away from other tech sectors. Now, when the initial retail hype fades and the market realizes that space logistics don't translate to quick, high-margin software profits, the correction in SpaceX will pull the entire Nasdaq down. Now, this week, while everyone was anticipating and staring at SpaceX rocket of a launch, an equally massive story has just developed on the ground. For months, the S&P 500 has been held hostage by a steep geopolitical risk premium. This is due to traders and fund managers still fearing an all-out energy shock. But as usual, that script was completely flipped this week. Breaking macro updates reported reveal a massive, sudden breakthrough on a diplomatic deal with Iran, and the market's reaction was swift and unforgiving. Speculators who had spent the last quarter hoarding energy contracts and oil futures immediately ran for the exits. Crude oil suffered a violent unwind, sending the entire S&P 500 energy sector into a tailspin. This massive geopolitical pivot forced a sudden multi-billion-dollar sector rotation away from commodities and straight back into high beta growth equities. For the equity bulls, this is the definite sign of a summer melt up. And crashing oil prices translates directly to lower input costs for corporations and massive relief for the everyday consumer. Now, this completely takes the wind out of the inflation narrative, giving the index a clear runway to expand valuation multiples without the looming threat of sticky macro pressures. Now, this is an absolute win-win for growth investors. But on the other side of the coin, the bears see a massive trap. They note that a sudden collapse in commodity prices is historically a leading indicator of an underlying slowdown in global industrial demand. Now, the final core catalyst driving heavy volatility inside the Nasdaq is the ongoing high-stakes battle for silicon dominance. Everyone's been obsessed with Nvidia, but the real narrative has shifted this week to its fiercest rival. AMD experienced a massive volume surge after a top-ranked Wall Street analyst issued a major, aggressive upgrade and raised their price targets significantly. According to technical reports, the upgrade was driven by fresh data showing that enterprise clients are aggressively diversing their supply chains away from Nvidia's pricing monopoly. AMD's newest AI chip architectures are seeing a massive acceleration in commercial orders, proving that the semiconductor bull market is broadening out far beyond just one or two names. The bulls are celebrating this as definite proof that the AI chip boom is structurally sustainable. If AMD can capture even a fraction of the enterprise market share currently controlled by Nvidia, its stock is fundamentally undervalued at its current multiples. This upgrade proves that the total addressable market for high-performance silicon is expanding much faster than skeptics realize. Now, this gives the Nasdaq a dual-engine growth narrative, ensuring that the tech rally isn't just dependent on a single company's earnings reports. Now, the bears see this as a textbook example of bubble broadening. They argue that analysts are aggressively chasing performance and hiking price targets at the absolute top of the cycle. But the reality is, enterprise capex budgets are not infinite. If companies are starting to buy from AMD simply because they can get allocation from Nvidia, it suggests panic buying and cyclical double ordering rather than genuine, organic, long-term demand. When corporate spending cools off later this year, the chip sector is going to experience an incredibly painful oversupply crisis. So here we are, living through one of the most volatile macro environments in modern market history. The public arrival of SpaceX has completely rewritten the liquidity playbook for the Nasdaq, while a potential geopolitical shift is fundamentally altering the inflation trajectory for the S&P 500. Now, the lines have been clearly drawn in the sand, and the stakes, they couldn't be higher. So I have one critical question for you. Looking at this massive influx of SpaceX retail volume and the sudden drop in energy prices, do you believe this is the ultimate launch pad for a historic tech rally? Or is this the final speculative blow-off top before the macro bubble bursts? Let me know your exact strategy in the comments below, and let me know if you're a bull or a bear going into this unprecedented time.